Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor and this is not financial advice. So in today's video, we'll take a look at the economic data. We'll go over some news, we'll do a market recap, and then we'll look at the trading opportunities from today. So starting here on the economic data, we did have US ISM manufacturing PMI come out here worse than expected at 46.3 with 47.5 forecasted there. Turning to the calendar, tomorrow, Tuesday, April 4th, we do have JOLTS job openings. Now we'll look at the news. We did have OPEC and Russia to cut oil production by over 1 million barrels per day, including over 500,000 cuts by Saudi Arabia. And these are the cuts here with Russia at 500,000 barrels per day, Saudi Arabia at 500,000, Iraq at 211, UAE at 144, Kuwait at 128, Kazakhstan at 78, Algeria at 48, and Oman at 40. So a lot of cuts going on with OPEC, causing oil to really just moon. And we also have Japan breaking the pact with the U.S. and its allies and has bought Russian over the oil price cap that the U.S. put in place. And this is the strategic petroleum reserve inventory here. As you can see, we're at the lowest levels since, the 80s because we had to drain it so much to get the gas prices back down, and we really didn't get to buy it up when oil was in the 60s, a couple days ago. So, yeah, this is going to be brutal here for the United States with OPEC cutting production and the price of oil to, go a lot higher. And if you remember in Friday's video, I was talking about how that $64.41 level was going to be the low on oil for quite some time, and then of course we get this kind of news. So yeah, this might be kind of brutal here in the United States for oil and gas prices, especially going into summer. And we do have China's yuan has replaced the US dollar as the most traded currency in Russia for the first time. And we have the WWE and the UFC parent company Endeavor to combine in a 21 billion mega merger. And we also have U.S. Social Security funds are projected to run out by 2033. And Finland is set to officially join NATO tomorrow. So now let's look at the markets here. We'll start here in the debt market with the 10-year yield. As you can see, big red day here, continuing to get downside momentum here after getting rejected off that midline, working its way down to the lower end of this daily range here. Starting the week pretty red here. Looking at the dollar, we do have another red day in the dollar, continuing down lower, looking to make its way down here towards this lower weekly extreme here. And getting pretty close to breaking last week's lows. So now we'll look at the stock market. Green day here in the stock market, getting continuation after that monster move we got on Friday. Really pushing up here through the upper extreme here on the daily chart. Cryptos, Bitcoin, we have a red day here and Bitcoin still consolidating up here at the upper end of this daily range. These bands are starting to get kind of squeezed here, so I would expect a move coming up probably sometime this week. XRP, red day here, and XRP still holding above that 50-cent level. Still up here at the upper end of this daily range. Yeah, we didn't get that close we were looking for on the weekend. We were looking for a close above that 55-cent level. Or at least these opening closes back here around 53 cents. But as you can see, we got a pretty solid wick here on the weekly chart. But yeah, definitely something to keep an eye on. See what happens if this midline catches up around here. So turning to commodities, we do have oil with all those OPEC cuts. As you can see, just a huge gap up. We closed Friday at $75 and we opened up today at $81.39. I mean, that is the biggest gap. I mean, I was kind of going through here, the daily chart, and I've never even really seen a gap, even during like the oil wars we had back in the day, back in 2020. I mean, I have never seen a gap like this on oil prices. So yeah, that's definitely something to keep an eye on with all these oil cuts going on with OPEC and Russia and Saudi Arabia and China and everyone ditching the U.S. dollar. So this could be the potential of a new bull run here starting in oil prices. So now we'll look at gold. Gold here, green day, looks like it's kind of wanting to break out of that bull pennant that we drew on Friday or Thursday. Starting the month off pretty green here. Silver, red day here in silver, just still sitting up here at the upper end of this daily range, battling through this previous structured resistance here from January. So now we'll look at the trades. We'll start with the daily chart on the SPY, do our volume analysis. As you can see, a lot lower volume. To start the week here, majority buying though, as you can see, just continuation to the upside after that nice volume spike we got on Friday to end the month. So now we'll look at the 5-minute. And here's the 5-minute on the SPY. Let me zoom out a little more. So that was that monster rip we got on Friday. We did open down here, slight gap down, and then you see we got a lot of strength in the morning. Pretty aggressive pullback here, and then, just chop sideways for, most of the day before getting a nice push into the close. So yeah, now we'll look at the relativity. So here we have the SPY, and then here we have the NASDAQ and the Qs. So you can see the massive divergence here. You can see the Qs got a much larger gap down than the SPY did. And the Qs are basically trading below the open most of the day, where the SPY was trading above the open. So there was a pretty big divergence here between the indices. So I didn't like that much. I like there to be, more synergy between the indices if I'm going to trade them. So I didn't really like any trades today on the S&P 500 or the NASDAQ. But, with that massive move in oil, I mean, we had a ton of oil companies here at the top. As you see, we had Rig, Exxon, Occidental, Schlumberger, Halliburton. There was a lot of big oil companies today that were benefiting from that massive production cut that we got in oil. So, yeah, that's what we're going to focus on today because there was some nice trades in oil. So we're going to look first here at Exxon because this was the trade I liked the most today. As you can see, just monster gap up through the 50-day and everything, and then we opened up, get a really strong push there off the open. Then we got our pullback, consolidation, squeeze with momentum shift to the upside. So, this could have been a pretty decent entry here. Obviously, it didn't really get its push till in the afternoon, but we can zoom out here on the daily chart. So as you can see, just monster gap up, big volume day here in ExxonMobil. Getting really close, to all-time highs up here. The all-time highs are sitting up here at $119.63. Lining up with that weekly extreme there on the upper end. So yeah, just big gap up day off that oil news. We can look here at the 15-minute. As you can see, we got our push up, pull back, squeeze. So that's why I was talking about that entry here, because we did have that 15-minute cross coming. But we weren't able to get it on that first squeeze up, so we did have to pull back for a retest, and then that 15-minute caught it again. And then we ended up getting a 15-minute squeeze here to really push us up through the highs and get that continuation into the close. So yeah, we can go back to the 5-minute. As you can see, that was that first squeeze I was talking about when the 15-minute first came up for the trade line VWAP cross. And we didn't quite get that squeeze, but we did get another squeeze here, as you can see, with that 15-minute coming back as support. And so this would have been, if you entered here, this would have been another nice re-entry to add to your position to get more size and just move your stop loss up. And these just made a really nice move here. I do have these contracts pulled up. So we'll say you're getting in here somewhere on this momentum shift like squeeze. We'll call it on the upper end. We'll call it about $1. I'll call it $1.20. And on that first move, you were looking at about a 10% gain, but on that extension up to the highs, you're looking at about a 43% gain on these Exxon calls. And we did have the 116 strike price on those option contracts. So yeah, this was like really the only trade I liked today. Scanning through, there really wasn't a lot of other opportunities. A lot of the other oil charts, like Oxy, they had the big gap up and just kind of pulled back. Rig just kind of went sideways. Halliburton, it kind of had its big gap up, then just, didn't really have any good moves. But there was actually another trade. I mean, there was a good setup. I wouldn't really call it a trade, but it was in, what was the ticker for it? CVE, Chevron. So we did have CVE, which is another oil company. Wait, no, this is not Chevron. This is Cenovus. This was an energy company too, benefiting from this oil play. As you see, it got push up, pull back, consolidation, squeeze with upper momentum, and it kind of got a nice move up here. But there was no options on this. Really, no options available to trade on this. So you would have had to buy the shares outright, and it really didn't make that good of a move. But that was the only other kind of decent squeeze that I saw. Definitely wouldn't have traded that, but I just wanted to point that out. But besides that, there really wasn't any other good squeezes. I mean, there was a lot of big divergence here in the overall market with the SPY being so much stronger than the NASDAQ. So we really, weren't looking. You did have double squeezes here with upward momentum, but we were, I don't know. I just didn't like the divergence here in the indices. So I did avoid that trade, and I really just focused on that Exxon trade to take advantage of all that bullish momentum and massive gap up we did get in oil prices. So yeah, really nice trade here on Exxon for call options. But yeah, that was really the only trade I wanted to go over. Not many other nice moves in the market today, but we did get a nice green day here. Starting the month off green. If you remember Friday's video, I was talking about how it looked like we would get this monthly cross, and it does appear that that monthly trade line is crossing above that 20 moving average, which is extremely bullish for a monthly chart. And getting that nice green open here on the quarterly chart. But we are getting pretty close up here to this upper extreme, so, we might have some resistance up here, or, this squeeze might just start, and we might just start really ripping here to the upside, but, we'll see what happens. With this open, I am super bullish here on the, on this month, and then, coming up throughout the rest of the year, but, we'll see how this weekly squeeze plays out. As you can see, the MACD here bouncing to the upside off this midline. But we are pretty overextended here on the stock RSI on the daily. So, this is a pretty aggressive up move we've made, as you can see, going straight up for basically 4 weeks. So I would expect some type of pullback here coming soon, but, the environment we're in is pretty wild, so who really knows? We'll just play it by ear, play our squeezes, play our patterns, and see what happens. So, yeah, that'll do it for the video. Appreciate y'all watching, and I will talk to y'all later.